Hey everybody, it's JJ here. You're watching Bull, Boom, Bear, Bust. It is Thursday, May 20th, 2021. Got a lot of news to get into. Let's go ahead and get started. We're going to talk about the repo crisis, a new record for 401k and retirement account millionaires has been set. We're also going to talk about a lot of people saw their favorite local stores go out of business since the crisis began about 1 year ago, and how 1 in 10 people have not recovered since the Great Sickness Recession was rolled out. Let's get started right here. Bank repo operations are surging once again. What is happening within the banking system? Well, we know right around the time that the Great Sickness rolled out in 2020, the banks were completely unleashed from lending standards as far as reserve requirements. They had to do that to keep the money flowing, to keep the banks able to lend money into the economy. Now, if we look back, we see this is one of the biggest spikes we've seen in many, many years, even bigger than the fall of 2019 repo crisis. Now, a lot of these previous spikes were at the end of the quarter when banks had to clear out their books for the reserve requirements. Right? So what is happening now? This is not the end of the quarter, so many people are scratching their head. Now, is the Fed going to lose control? Does this mean that the banking system is going to implode, that there's going to be a big credit freeze and then massive carnage and deflation and a crash? No, I don't think so, because why? The Fed, they can create unlimited amounts of money out of thin air. Also, this spike here really doesn't mean anything. The Fed can just double, triple, quadruple their actions. And the Fed has even came out and said whatever it takes to support these markets. So no, unless something out of the blue happens or something jumps out of the shadows, black swan event, a major cyber attack, a major power outage, some major act of war, unless something big happens to disrupt the entire system, then no, the Fed is not going to just lose control, and they're not going to let the banks implode. So there are some channels out there making a pretty big deal out of this second repo crisis, but I predict that this is not going to lead to the implosion of the banking system like some are saying. Next, CNBC article, 1 in 10 Americans say that they will never recover financially from the Great Sickness Recession, from the crisis. And roughly half of working adults now say that economically, the crisis will make it harder for them to achieve their long-term financial goals. Well, especially when you look at the stagnant wages and the continued rising cost of living and inflation, even people that think they're going to do okay are going to see, they're going to have a very rude awakening as we continue to see this inflation being pumped into the American standard of living. Next, out of study finds, half of Americans say that they saw their favorite local store shut down because of the Great Sickness Recession. And it's interesting when you take a look back and see the record profits that the mega corporations have raked in, since a lot of these smaller businesses were put out of business or allowed to fail. Remember, if you're a middle-class American, a hardworking American, if you're a mom and pop business owner, you are not too big to fail. But if you're a mega global multinational corporation or financial institution, then you're deemed too big to fail because you are, quote unquote, a job creator. Even though it's small businesses that historically have created the most jobs in the US economy, well, things are changing quite rapidly, and the money's going to continue to flow even faster to the top 10%. But here's some good news. The number of 401k and IRA millionaires hits record 1 year after the Great Sickness shut down. Okay, so while these are paper gains, it does give people the bragging rights of being a millionaire. And in the first quarter of 2021, the average balance in these retirement accounts surged past the record that was set in the fourth quarter of 2020, which was the first time that the average hit $100,000 for these average accounts. All right, so it looks good on the surface, but a lot of these people are just, again, gains on paper. You'll be penalized if you try to take the money out. There was a brief window where you were able to take the money out without a fee, without paying a penalty, but these paper gains may not be any match, even if they were cashed out, may not be much of a match for the rising cost of living that in most cases is still outpacing the average 401k return. Now, back on the topic of the repo crisis, Fed officials expressed support for permanent repo facilities in their April minutes. Right, so the Fed's going to be there to have the backs of the banks. What does that mean? That means more lending, more debt, more rising prices, no accountability for the banks, no matter how many loans they give out. And where there's no accountability, you're going to see more of it. It's pretty simple, right? Speaking of asset bubbles and rising prices and more millionaires, well, home equity now hits a record high. And a lot of people are going to cash out and tap their home equity, and they'll go out and spend it, and it's going to make the economy look good for a while. Right? More spending, we know that creates jobs temporarily. And of course, most of those jobs will be low-paying jobs and not enough to really help people keep up with, again, the rising cost of living and the inflation that's being pumped out there into the economy. So what happens when home prices rise way faster than the wages? Well, you see more debt, more people taking out bigger and bigger mortgages. Here's a CNBC article. Home buyers are applying for ever bigger mortgages as home prices soar. Right? So where does it end? Is there ever a point where people are afraid to go further into debt? Right? Is it that many people are confident that things are going to get better, that their jobs are going to pay more to be able to pay off these mortgages? Recent article out of marketplace.org, as home prices rise, so does mortgage debt, right? It's not rocket science. The more banks can lend, the higher prices will go. The Fed is offering infinite support for the banks. It's not going to be like 2008 where you saw deflation. Back then, remember, banks were afraid to lend. They pulled back on the lending. The banks were not confident that the money printers, the Fed, was going to be there no matter what. Now the banks are confident, so they're going to continue to lend. It doesn't matter how many people get behind on their payments. And even if they do, home prices are rising so fast, these people that are behind on their mortgages can turn around and sell the home for a profit and get out from under that loan and sell it to the next person who, in most cases, took out a bigger loan to cover the higher home price. Right? So this is a never-ending scheme by the money printers. Those that are not positioned for the ride up, the bull market, the rising prices, will find themselves left behind. Non-investors, people sitting on mostly cash, or even worse, people sitting all 100% in cash, waiting for prices to correct. You could see yourself in big pain. Try to balance yourself for both possibilities. Unless something big comes in and freezes this money lending system and pulls the plug off the money printer, it's going to continue to be a melt up, a bull boom, and harder times for a lot of people. Hard times are coming, folks. Unless you're a paper millionaire, even if you are, I hope it's enough profits and gains for you to keep up with this rising cost of living, because it's getting nasty and it's going to get nastier. Utility bills, energy, gas, rents, insurance costs, all exploding higher. Food prices, car prices, you name it. It's going to be a nightmare, folks. Continue to prepare, keep stacking, stay well, stay safe, stay prepared. Bye for now, everybody. Peace.